stock market priced in gold, it peaked in the year 2000. That's 25 years ago. And that's the basis of one of these books back here called The Invisible Crash. Gold is a constant. An ounce of gold is the same mass anywhere in the universe. It doesn't change. So if you use that as the constant, you plot the S&P 500 against it or the Dow, you'll find actually they've been in a downtrend against gold.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for June 30th to July 6th, 2025, while supplies last. First this week we feature backdated 1/10-ounce gold maples at just $45 over melt per coin. Next, 1-ounce silver Swiss Pamp rounds are just $2.59 over spot per ounce. 90% mixed junk constitutional silver is only 99 cents over spot. And finally, backdated 1-ounce platinum platypus coins are just $119 over spot per ounce. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance, and back with us today is our good friend David Morgan from the Morgan Report. David, thank you so much for joining us today.
Elijah, it's great to be back with you. Thanks.
Well, it's great to have you today. I did want to discuss the action we're seeing in the metals markets. We're seeing silver again surpass that $37 level. It seems like it's holding quite steady there. We're seeing gold, a lot of strength again in gold, and platinum year to date, it seems like is up about 40% or so. Your take on the moves in all three metals?
Well, we talked a while back about, the confirmation idea in the metals. In other words, you got to have confirmation of gold's move with the other metals. And we've had that now, especially platinum, actually outperforming everybody year to date. So I'm very confident, and I was before the confirmation, that, we are in the next leg of a major bull market in the precious metals. Silver above 37 technically is very bullish, very strong, and silver could take off at any time. You never know if silver can fool the best of us as far as wanting it to do something and it not performing the way you expect. But nonetheless, I think the trend is very clear. So even though the summer doldrums are here, the white metals seem to be doing quite well, as gold kind of just is going sideways more or less until we get through the $3,500 level. It's the Morgan rule, where we see it 3 days in a row above the breakout point on above average volume. Then I'd be convinced that we're on our way for, further gains. So I still think we're going to go sideways in gold through the summer. August is usually the weakest month for the metals, but overall, very bullish, very happy, very pleased. I think the markets are moving at a pace that causes excitement, but not so fast that people will have the fear of missing out and think that, it's only going to last another month or two, because that's not the case in my view. It's going to continue. There will be some very sharp corrections that will scare people, but nonetheless, the overall trend is pretty clear.
Now, one thing I was looking at is I was looking at the charts with respect to the, where it showed the pullback in the 2007-2008 crisis, and then gold pretty much doubled after that, going up near 2000. But for the next decade, we saw, kind of a consolidation, right? It wasn't until 2020 where we went back into that 2000 level. People also compare, what we've seen since 2020 to what happened in the in the 1970s bull market. And based on that analysis, we could see a doubling from here in pretty short order. What do you compare the current situation to if we look into the past, and what kind of movements do you see that we could see a long consolidation here in gold? Or do you think, in the next couple of years, we might be able to see more of a blow off top?
Yeah, it's the latter, Elijah. I've been studying markets, not just the precious metals market, but market theory. I'm not a big Elliott wave guy, but I've studied that, Gann theory, a lot of things. I used to trade futures for a living, so I have a good idea of a lot of technical indicators, and you really want the fundamentals. And the fundamentals of the Elliott wave theory is pretty much there's 5 waves. There's 1 up, 1 down. There's 1 up, 2 down, 3 up, 4 down, and 5 up. And the 5th leg up, or 3rd leg up, or the 5th wave is generally the biggest, and that's where the 90% of the move comes in the last 10% of the time. And that's true in real estate, it's true in the stock market, it's true in the tech bubble, true in almost all markets. It's not an exact science, it's an art form. But on that basis, I think that we're going to see the largest move could get a double from here. So you go from 3,000, you could do the breakout. The first breakout really was $2,000 gold. We just couldn't seem to get above that ceiling. And then finally we did. We got above 2,000, went to 3,500, pretty short order. So you could take that 2,000 and you could double or triple it. You could say 4,000 to 6,000. And in time frame, 90% and 10%. What does that mean? Well, we've had basically a 20-year bull market, maybe more than that. That'd be 2 or 3 years. I'm thinking about 3. We've already started it maybe 6 months ago. So again, it's not a perfect science. So my take is we're going to see the biggest moves ahead of us, meaning rapid appreciation within 2-3 years, and expectations probably in the $1,000 gold, meaning like 4, 5, 6. I don't think we're seeing 10, but people think we could get to 20. I could make that argument. And then silver, I said 2003 we see triple digit silver, and I still believe that. As far as where will the gold silver ratio be at the top, you didn't ask that question, but I've been thinking about it a lot lately. And the gold silver ratio in this bull market so far had a day or two at 33-1. And I think we'll get back there or close to it. So 40-1. I'm not so sure that we'll get to 16-1 or 10-1 that I wrote about way back in 2002 or 3. We could. It really just depends on market sentiment more than anything else, where we go. So higher, yes. When? I'll be vague. 2 to 3 years. Prices, I'll be vague. Triple digit silver, and then multiple thousands for gold.
We recently heard an update regarding Basel III, that it's finally being implemented to really making gold a tier 1 asset. So did you want to expand a little bit on this? What does this mean for the gold market going forward? It seems like in times past, when we've seen gold and silver bull markets, I mean, if we look back at 1980, if we look back at 2011, it's not like the whole world was jumping in or that they were treating gold as money, but it seems like we have a slightly better dynamic here today.
Yeah, so I addressed this on Twitter, but not in the public. A lot of commentators, some Kitco, some on LinkedIn, and other places talk about, the tier 1 aspect of Basel III. And I think Basel III is kind of overblown. I go back to the old market adage, buying the rumor, selling the news. The rumor's been out for a very long time, lots of commentary about it, and now the news is out there, it's enacted. So these analysts argue that Basel III is a bookkeeping reform, not a catalyst for gold buying mandates. Gold price remains driven, and it's really not. So gold remains driven by liquidity, central bank buying, inflation, and macro factors. I mean, those are the same drivers that were there before Basel III. The reform looks like it could be explosive to boost physical holdings by bank, but that's really uncertain. Really, it's reduced some of the trading desk and consolidated things. But I think it's a kind of a ho-hum at this point. I don't agree. Gold remains a tier 1 asset, which is bullish, not bearish. In effect, it's a gradual structural shift, not an overnight shock. Gold prices, again, remain tied to the gold liquidity, real yields, supply-demand fundamentals, and central bank policy. So it's not a no-brainer, but it's certainly not, I think, needs to be as hyped up as some others have said.
On the other side, we are seeing the dollar taking a dip here this year as we're trading below 100 in the dollar index, and we're around 96, 97 as we speak. What do you think the significance of this is?
it is significant. And I was looking at the dollar chart before we connected this morning, and it looks to me like we're on our way to maybe 91 or so in fairly short order. I mean, the administration wants us cheaper dollar. I mean, basically any nation state wants their currency to be cheap because they get an advantage as far as an export advantage. So as Jim Dines used to call a race to the bottom, everybody's competing against everyone else to weaken their currency. And this is a very sad state of affairs. But the dollar certainly going that direction. And, if you look at a long-term chart, I mean, dollar, the Dixie's been down to, I think, 70 or something. Do it from memory. I just looked at a near-term chart before the call. But I do think that it's got more room to the downside, and it may mitigate some of the foreign exchange problems that other countries have paying back the U.S. in dollars. Because if it weakens on the dollar index, that means those other currencies against it are increasing. Because when you got to pay back dollars and they're more expensive in your currency, it makes it harder on these other nation states to pay back the dollar debt. So I'm always been concerned about, the dollar because, as we've said 100 times, it's the most stable currency out there, and it is the reserve currency, and it's the most depended on and most dependable on a global basis. But that's been shifting quite a bit the last few years. I mean, Andy Schechtman talks about it very, very often, as others do, that, with the BRICS really interjecting peer-to-peer currencies, without a BRICS currency per se, they are trading each other's currencies and circumventing the dollar altogether. And then with the OPEC nations, OPEC Plus, taking on other currencies to settle oil debts or oil transactions have been taking place. So the dollar's really being mitigated from its top role, which it still has, but less and less significantly. And I think that trend will continue, and I think you'll see a lower dollar as we go forward.
Now, beginning this year, we really had a scare in the stock market. A lot of people were thinking this was the big one with respect to the stock market dip. This could be the start of a bigger crash. We went down 15 or so percent in the stock market, but now we're pretty much touching all-time highs. If you look at the Dow, your take on this, was that just kind of a scare, a fake? Was that a false alarm in your view? And where do you see the stock market headed from here?
Yeah, it's a really tough one. I mean, it's, something I've thought about again and again and again. So I was, a fairly young man when the crash of 1987 took place. And that was really scary. I mean, no one expected to see that kind of a down day in the stock market. And once that occurred, they formed the Working Group on Financial Markets, better known sarcastically as the Plunge Protection Team. And what the powers that be that united under the Working Group did was they bought futures on the exchange, on the futures exchange, or like the S&P 500. They leveraged the heck out of it. So that's where a little bit of money has a lot of power because it's so leveraged. And they went in and they bought futures, and they're able to manipulate the market higher and overcome that really devastating, very scary market correction, which might have been needed in a real free market. But nonetheless, the Pledge Protection Team rescued the day. So pretty much what I've witnessed from that point till now is whenever there's the ability to see the market really make a rather significant correction, 20% or more, there's always somebody, something, the PPT, to come in and basically rescue the market and not let it falter too much. And there's reasons for that. I mean, there's so much tied to the stock market and the insurance industry and pension plans and 401ks and private pension works. I mean, really, if you had a 1930 style stock market crash where it was over an extended period of time and really couldn't get off the map for quite some time, as a metaphor, that would be so devastating to not only the United States and all the entities I named, but on a global basis as well. So I think there's a lot of power and emphasis to continue to provide the stock market with whatever liquidity is needed to keep it at a rather high level. They may not continue to move it higher and higher in real terms, because if you look at the stock market in terms of the stock market priced in gold, it peaked in the year 2000. That's 25 years ago. And that's the basis of one of these books back here called The Invisible Crash. Gold is a constant. An ounce of gold is the same mass anywhere in the universe. It doesn't change. So if you use that as the constant, you plot the S&P 500 against it or the Dow, you'll find actually they've been in a downtrend against gold. So what does that mean? It means that possibly, Elijah, and I'll get to the point, because this is very important, something I really wouldn't have thought of up until about the last 2 years, that if we get into a hyperinflationary depression, we could see a high stock market, which has very, very little value because the currency is being destroyed at such a rapid rate. I mean, if you want to look at some really well-performing stock markets, one of the best ever was Zimbabwe after they revalued. Venezuela, the same thing. I'm not saying the U.S. stock market's going to do that, but it does give me pause for concern that there's so much bias to keep it moving higher that we could inadvertently turn the stock market into something that is similar to a situation where you get into an inflationary environment where the stock market looks very good on numbers, but as far as protecting you from an inflationary blow-up, it doesn't really do it. It's better than the bank, but it may be better in real estate in some cases. But in those type of situations, and I'm not forecasting this, but I've thought about it. I never would have thought before that we would ever see anything in that manner in the U.S. stock market, that it was just too much free market influence still in those markets that no one could really overcome it and provide a inflationary environment where it just keeps going up. I've changed my view. I am not 100% on that, but I give it like a fairly high percentage that could take place.
And you have recently written an article that you sent to a lot of people, including myself, about how when sound money dies, freedom dies as well. And I wanted to discuss this because you mentioned how, it might be that the stock market just continues to go up and people might feel good about that. But in reality, when you compare it to the decline in the value of the currency unit, it's actually crashing, or, people aren't doing as well as they think they are. So how does, when you come off of a gold standard, when you introduce fiat currency, how does that really corrupt people's understanding of economic reality? And also, it seems like it has ethical implications as well, just people's sense of morality as well.
Yeah, you nailed, I think, the most important part. And Robert Prechter's done work on this as well as others, but there's a direct correlation between the sound money system, or what I call honest money, and the more decline in a fiat system. There's a direct correlation. So the more the money is debased, the more the moral structure of the society is debased. And this has been shown again and again and again. So really, the whole system is based on trust. I trust that, that $5 quote unquote dollars will buy me the coffee that I want at Starbucks, and you can still do that. It used to be, 1/5 that amount or whatever it is. So when people lose their ability to trust each other or trust the currency, which is where all commerce comes from, that means that their labor is being devalued. In other words, you can't save for the future an hour worth of your labor today will be the same as an hour labor 10 years from now, which is what money's supposed to do. It's supposed to give you a value system that perpetuates stored labor so that when you want to use it, you get the same return on it that you had when you performed whatever the task was. So a truly free society, that trust has to be, number one. And so when that's destroyed, and when the whole system is manipulated through interest rates, markets are flooded with currency to keep the liquidity, like we just discussed in the stock markets, and markets don't reward, savings and prudence. Debt becomes addictive. And because we are addicted to debt in a debt-based system, you got to continue to add more and more to keep the whole thing going. The adage that many have used is appropriate. It's like giving someone of the drinking problem more and more to drink, or someone with drugs more and more drugs. It doesn't solve the problem, and to get the same high, more and more is required. And this is what's happening in the fiat money system. More and more debt have to be created to keep the system just going. But in real terms, it's actually depreciating, as I said about the Dow in terms of the gold, So it's insidious because most people don't really understand what's happening. All they know is it costs more. They're earning more. They maybe got a pretty good raise, but they go to the grocery store and fill up their car and pay for the insurance or healthcare or whatever it may be, and realize that raise really didn't help them very much. In fact, they feel like they're getting poorer. So it just doesn't attack the wall. It attacks your freedom. When people can't save, they can't plan. And when they can't plan, they can't act independently. And that means they rely more and more on credit to make up to keep their lifestyle up. Or they go on government assistance, or they have someone, manage the instability for them if you're wealthy or whatever. But it's dependency, and that's the opposite of liberty. You're dependent on borrowing more. You're dependent on maybe some government program. You're dependent on that second job or whatever. And so that breeds control, because my whole film on Silver Sunrise really talks about the power that the money powers have to control society. And that's the danger. History shows that when the money system collapses, the political fallout is rarely fall behind. So if we do have a true currency crisis, there will be a political crisis basically at the same time. And this isn't alarmism. It's basically pattern recognition. This has happened again and again and again. As Ecclesiastes says, nothing new under the sun. It's just that what worried me from the beginning when I founded the Morgan Report was that never, to my understanding, has it ever happened at this scale. You could argue the Roman Empire was a world empire, which it was, but we have a very sophisticated global situation with 8 billion people. And if the dollar goes, what happens? Now, I really will reiterate that I don't think the dollar will get to that place. I think that a new system will be enacted where we, quote unquote, reset to the new system before we have that kind of a problem. Nonetheless, I don't rule it out. I do think that the powers that be, for the most part, have so much hubris, are so arrogant, and so satisfied with their ability to control things that they don't even conceive of the idea that things could get out of control. I do hold that as a possibility, although it's a rather remote one.
I think it's good to understand that really, this is just, the dollar collapse is kind of just logical. If you look back at history, this is what happens to fiat currencies. And as you mentioned, it might not be exactly like it happened in the past. History doesn't repeat, but it rhymes. And we have to prepare for this crisis ahead. So we really appreciate you being here and sharing your insights on this, how it really, we need to be aware how it can, fiat currency can corrupt our judgment, and be aware of that, and also corrupt society as well, so that we can stand up against that and work towards freedom. So thank you so much for all your insights today. If our viewers are interested in learning more, they can go to themorganreport.com. Can you tell us a bit about that and your documentary that's coming up here, really about freedom and fiat currency?
Yeah, thank you. Yeah, just one place to go, themorganreport.com. All the there's links at the top right of that page to go to other places like X or YouTube or LinkedIn or whatever. And then as far as the documentary, I do have a final editor in process, and he's giving me a lot of encouragement as far as timeliness. And so I'm thinking the end of August, and it'll probably be free based on donations, but I'm pretty anxious to get it out. But of course, I want a perfect product, which is impossible. But nonetheless, a lot of work went into it, and I think it'll be well received.
Perfect. Well, David, thank you so much for your time today, and God bless.
God bless you. Thank you.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for June 30th to July 6th, 2025, while supplies last. First this week, we feature backdated 1/10-ounce gold maples at just $45 over melt per coin. Next, 1-ounce silver Swiss Pamp rounds are just $2.59 over spot per ounce. 90% mixed junk constitutional silver is only 99 cents over spot. And finally, backdated 1-ounce platinum platypus coins are just $119 over spot per ounce. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.